Hey guys, so welcome back to the channel. Today I have a new great profitable trading strategy which I'm going to backtest for you over 100 trades. I will tell you about the indicators we're going to be using, show you a few examples, and then perform the 100 trade backtest. This strategy involves two trading indicators, the adaptive moving average and the exponentially moving average. Guys, if you want to support this channel and receive exclusive access to all the strategies we've backtested so far, please check out our Patreon page. We will have a Discord live chat, which you can use to ask any questions to the community, and the first 30 people joining the middle tier will automatically have full access to the top tier at no extra cost, which will allow you to send a strategy for me to backtest. I saw a few of you have already joined, so thank you so much. I will create a video similar to the one you're watching and present everyone with the results. So please consider having a look at the first link in the description, and I hope to see many of you on the Discord community. An adaptive moving average, also known as an AMA, is one more moving average overlay, just like an EMA. So it changes its sensitivity to price fluctuations. It becomes more sensitive during periods when price is moving in a certain direction and becomes less sensitive to price movement when price is volatile. So it's a great indicator to determine the direction of the market. And the second indicator that we're going to be using is the exponential moving average, also known as an EMA, which is a type of moving average that places a greater weight and significance on the most recent data points. The EMA is also known as the exponentially weighted moving average, which reacts more significantly to recent price changes than a simple moving average, which applies an equal weight to all observations in the period. So this strategy is based on the 15-minute time frame on Euro USD. So here's the strategy. We go long when the adaptive moving average is white and the 9 EMA crosses the 21 EMA from below. And we go short when the adaptive moving average is black and the 9 EMA crosses below the 21 EMA. We place the stop loss at the last swing. We can only have a maximum of one long and one short at any given time. We will have a variable risk to reward ratio. And when the open profit reaches 1R, we move the stop loss by 1R. So let's get on the charts now so I can show you a few trades and then we'll dive straight into the backtest. All right, guys, so here we are on the charts on Euro USD on the 15-minute time frame. We'll go ahead and add the indicators. So the first indicator that you want to get is the adaptive moving average, and you're going to want to get the ever get indicator. Then the second indicator is the EMA, and you need to click twice on it to add two indicators. So we'll go ahead and change the indicator, the AMA settings. So in terms of the actual settings, you're going to leave them as they are. You can change the colors. So in this case, we're using black and white just for simplicity purposes. So the color 0 will be white, which means we're looking for long positions, and color 1 is black. We're looking for short positions. So you're going to click OK. And for the EMA, you are going to want a length of 9. For the short-term EMA, you can change that to any color that you want. And then the second one, the longer length EMA, is 21. You can change that to another color. I'll change light blue, and there you go. So essentially, if we zoom in, when the adaptive moving average is white, we're looking for long positions, but also the red line, which is the 9 EMA, needs to be above blue line, which is the 21 EMA. So in this case, the adaptive moving average is white, and then we go long when both conditions are met. So that would be on this candle right here. So you would take a long position, place the stop loss at the last swing, and then ride the wave. So the maximum open profit would have been 3.87. So you would have moved your stop loss up to 1 to 2. So this wouldn't have reached your stop loss. So the next swing goes to 6.55. So you would have moved your stop loss to 1 to 5. And in this case, it gets hit. So that would have been a 1 to 5 risk to reward ratio, right here. So let me show you a few examples and then we'll dive into the backtest. All right, here are a couple of trade examples. As you can see, the adaptive moving average turns white and the red EMA, which is the 9 EMA, crosses the 21 EMA above. So you would take a long position right here, place the stop loss at the last swing, and you would move the stop loss by 1R every time the open profit reaches 1R. So you would have reached a 1 to 1.79, which means you would have moved your stop loss only to break even, which would have been hit right here. During that time, you can only take short positions. So as you can see here, the adaptive moving average turns black and the red EMA crosses the blue EMA, the downside. So you take a short position, you place a stop loss at the last swing, and that is a loss. Similarly here, you've got both conditions met. So you take a short position, stop loss at the last swing, you reach an open profit of 1.94. So essentially you would have moved your stop loss only to break even, which gets hit right here. And again, the conditions are met right here. You take a short position and that's a loss. So let's do the back test, see how this performs over the long term, and I'll see you back for the results. So there you go, guys, the results on Euro USD on the 15-minute time frame. We had a maximum drawdown of 19%. We were risking 5% per trade with a variable risk to reward ratio. We had 30 wins, 33 losses, and 37 break-even trades. We had a maximum of 3 wins in a row and 4 losses in a row, with a win rate of 48% over a bit more than a month. So during those 39 days, you would have made a total profit of 116.7%. So if you would have started with $10,000, you would have ended up with $21,675. So as you can see, this is a profitable strategy. On the 15-minute time frame, I think the performance could even be better on lower time frames. Obviously, this is a trending strategy, which means that when the market is flat, it doesn't perform very well. But if you can just filter out the trends, this is a very profitable strategy. So let me know what you guys think, what indicators you're using to filter out the horizontal market, and I'll see you in the next video.